Good morning traders, and welcome to this week's weekly market analysis, Monday the 4th of May. Before we get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Looking at the week that was, the Aussie dollar had a mixed week with a rise over the early part of the week, only to finish down around about 1% over Thursday, Friday. Now the reason for that was predominantly the US's intention to punish China as they look to point the finger over the COVID-19 situation. What they intend to do is introduce a new round of tariffs aimed at China that would essentially nullify last year's efforts and difficult trade situation where they negotiated a deal. What this could mean, it could reignite and spark a trade war again between the US and China. Of course, Australia is heavily reliant on China, so any bad news towards China affects us directly. Consequently, our Aussie dollar lost around about 1% Thursday, Friday. Also, the stock markets were impacted by this news, and particularly the Dow Jones Industrials lost around about 600 points. Our own ASX 200 also had a strong negative day on Friday. If we move along to the euro last week did make a sharp recovery. They did have their monetary policy information released, where they essentially said that they will increase stimulus to continue to fight the COVID-19 economic situation. The euro last week made around about 150 pips against the US dollar, and around about 600 pips against the AUD, with the euro AUD rising spectacularly over Thursday, Friday. If we look at the week ahead, this week is actually quite jammed with information and data to be released. Locally, we have the RBA rates announcement and the monetary policy statements which are due out. Also from the UK in London, they also have rates decision and their monetary policies. Also look out for the votes on that. There's not much expectation in terms of rates movements this week, but more in what the message will be in those policies, is particularly moving forward out of this COVID-19 situation. We also have jobs numbers that are due to be released from Canada, and of course at the end of the week we have non-farm payrolls from the US. This is the Super Bowl of data in the FX world. It is a major news release, so please make sure that you are aware of that. We don't get caught up in any data that we are not intending to get caught up in. Also, finally, for this week, we do have sales numbers, our retail sales numbers out for Australia, and that pretty much wraps up the week. The market seems to be settling into a little bit more rhythm as we start to ride out the initial shock of COVID-19 situation globally. So let's see how this week plays out. Now let me go through the majors and let's see how this week plays out for us. Okay, let's kick off with the Aussie dollar. As we saw, Aussie dollar rose towards the front of the week, only to fall back down towards the latter part of the week. Now this kind of helps us in our philosophy or our thought process of a trending Australian dollar. This is what we were kind of looking for in the last couple of weeks, so I believe that it's helped us in that respect. So what I'm going to be looking for in the Aussie dollar is I want to find a price action reversal somewhere in that region, and if I can produce it, well then that would be the trigger for the Aussie dollar to continue in its trend upwards. Okay, now we do note the big spike. Of course, that was caused by the COVID-19 situation, and most currencies and a lot of the equities have all experienced this. But from that moment, we can see that it does look like it's in that kind of pattern, and we are at that position right now. We're looking for a reversal there so that we can take advantage. So for those of you who are newer to the class, if we were to, for example, get a candle that looked like this, let's say today, that's a red candle, let's make it, and then if tomorrow we got a little candle which was inside of the other one, as I've pointed out as such there, well then basically that would be the trigger to place our pending order and continue the trend upward. So our plan for the Australian dollar this week is let's look for the reversal in this region and let's see if we can continue on the trend. Alright, let's move on. Let's have a look at the Euro USD. Last week I marked out this level here just to keep in mind that that was perhaps some kind of a flaw. The Euro did have a strong week this week. We can see that it's pushed up as such. And when I look at this particular chart at the moment, there's a couple of things that I want to do. It's not, look, the reality is up until this point, we were getting into a more narrow market, but then as soon as we broke down here, we extended the range and we broke there. So basically we've got wider and wider from the previous containment regions. So usually when a chart does this, it's a signal to the market is fighting in both directions. Okay, so we've made lower lows and we've made higher highs at the same time. So it's usually a market that I like to stay away from. Okay, to be honest, this week for the Euro USD, there is nothing really that I want to do. I'm just going to put in some lines just to check something that I perhaps can see in this. And give me one moment. The only thing that I perhaps want to look at is this falling channel. If we have two lines there, we have that one there. Let's see if anything can happen in that area there to perhaps look at that. But look, the reality is we've expanded the trading range, so this market has got a little bit funny. I will keep these markers on my chart just to monitor it. If I was to get a really nice price action reversal in that region right there, perhaps I will consider that trade. Okay, if I do so, I will make sure that I'll let you know in the daily call if it's one of the charts that sings out to me, so to speak. So for now, let's just leave the markers in there. The plan for the Euro USD this week is to leave it alone. Let's wait and see if this level holds. If we do get a nice reversal there, we may look at taking that trade. Alright, moving on. Let's have a look at our US yen. If you recall last week, the US yen, I said this chart looks like that bouncy bull type scenario where it bounces, and then it falls. Now it did break. We can see that it's broke there, but it's fought back quite quickly. So let's see. Typically, if I had been trading this, my stop is usually placed somewhere above there. So if you were in this, what some people like to do is they actually like it to fall down, come back and test before you continue. Now, if that's what you like, we have in fact made an inside candle right there, which would basically mean if the market's fallen through, it's pulled back up, it's produced a reversal pattern, which basically opens up the door for a short. Now, let me zoom in a little bit so we can look at it a bit closer. If you do decide that you want to short this one, you would have to place your pending order at the break of the low. So this is this morning's candle. This is only about an hour or so into its formation. So if you place your pending order at the break of this inside candle here where I've marked it, then basically from there is where you will be looking at becoming a seller on the US yen. Alright, so there you have it. For those of you who want to, it would be a legitimate setup. The reason for the trade is it's kind of trending downwards. It's broken through this support level, come back, tested it, produced a reversal pattern, and I mean, how much more things do we want to line up before we pull the trigger? So we can place our pending order onto this one right now. Okay, so for those of you who don't know how to do that, the easiest way that I do is I bring up my crosshairs and you can press the little middle wheel on your cursor, place it on the the horizontal, place it right where, see, I'm placing it right where that candle is about to break. Then what I do is I right click again, and if I go to let me see, go to trading, then I've got the option of buy limit or a sell stop. It'll be a sell stop. If I click on that, I just put in the volume of the trade that I want to. That level there is already, so this number here that I've just highlighted is already the correct level. And then put your stop and your profit, and then you can just place the order as such. And if you can see there, so I've just placed that, and it's let me zoom in so we can all see it a bit better. I know this is a bit tedious, a lot of you know how to do this, but I just thought I'd just show you. So basically the order is right there and it's ready to be a sell at the break. Now what I haven't done is I haven't placed any protection on that order, so if I was to do that, just go open up your orders and then just place a stop or a stop and a target. Okay, all right, now that's just a tiny order, so I'll just leave it there. I'll fix it all up later. All right, let's move along and have a look at my GBPUSD. Last week I drew this channel and we didn't quite push up towards it, so we've a bit short on that. We're still in no man's land, so let's see what happens when we get to this level here. We may get another chance to push off there, or if it does continue to this level there, then I'll get a chance to push downwards in that direction. All right, this one's pretty straightforward. We will keep our thought process the same as last week, and let's see what plays out for us on this particular one there. So that's the GBP USD. Let me have a look at the US CAD. Okay, last week I marked out this floor, and let me see, that was Friday, Thursday, Wednesday, Tuesday, Monday. So we were over here last week. I marked out the floor. Look at that, it came right to the floor and then bounced off really, really nicely. The only downside to this is that we didn't get a reversal pattern here at all, so we didn't get an opportunity to trade this. All right, but what it has done is it has established the zone. So now what we got to do is let's see if we can get up to this level, produce our reversal pattern, and then we will try and take the trade in this direction. Okay, so unfortunately we didn't get a setup last week for the US CAD. The level that we marked out did hold. It held nicely. You can go back and review last week's class. You can see that my markings are the same as what I had last week. So it did establish now the trading zone. So let's see what happens as we push towards that top level. All right, US CAD. Let me have a look at the Kiwi US dollar. All right, I marked this zones as well on the Kiwi, and actually this is a reversal pattern. This is a 3 candle reversal pattern. Okay, go back and review your reversal patterns. This one is a reversal pattern. Now, however, I'm seeing it one day. Oh, this is this morning, so that candle's already started. So the way that you would trade this, you would have jumped as soon as it opened, you would be a seller. So if you're seeing it now, depending what time you watch this video, I don't know where that candle will be when you watch it, but at the moment we're about 25 pips already into a profit situation, so it may be a little bit late for you. Unfortunately, normally when you trade a daily candle, what you should be doing is at the start of the candle is when you should be looking at the markets so that you can make your decision then and there. Okay, and at the moment in our winter, that is at 7 a.m. Okay, so well, if you're in the eastern side of Australia, so Sydney, Melbourne, it's 7 a.m. when the new candle starts. All right, so there you have it. So this one is set. It's in motion. It's basically 25 pips already into the correct direction of the trade. All right, so that's the Kiwi US dollar. Let's have a look at oil. Again, if you're watching this for the first time, just keep an eye on that top there. That will tell you what chart I'm on if I don't mention it and you get lost. Okay, so oil. Oil has somewhat settled after this panic sell-off. This is something that oil I don't want to be a part of. Okay, it's a little bit too volatile. There's too many uncertainties in it. I'm not interested at all in this particular chart. I'm just showing it to you so that we can all track it. Well, we're trading at about $8.24. So with oil, let's just leave it alone. Okay, there you have it. ASX 200. Now, we had a big sell-off on Friday, and you can see there it is. The equity markets did drop ground significantly, and that was mainly due to the proposed tariffs that could be imposed on China, which could start up a trade war again after last year's trade deals that were already done. So the markets did take it, was particularly the stock markets did feel the impact of that, and that's a result on our ASX 200 dropping. So let's see what may happen. This chart right now still doesn't look like anything to me. If anything, it feels more to the downside, but I don't see a set trade in either direction for the ASX 200. All right. Last one for the week. Let me finish up on gold. We marked this top level to see if we could break through it. We did not break through it. There was a little bit of there was a reversal pattern right here. I've just circled it there. Those two candles there were a reversal pattern. It wasn't right exactly on that level, but it was very, very close. If you did trade that, your entry would have been there. So the distance, that distance here is roughly the same distance as it's traveled, so probably you would have hit your one-to-one target on that particular trade. Now when I look at this right now, what I instantly want to do is I want to put a marker around about here, and what I'm going to do is I'm going to grab this one and just extend it through, and I'm just going to monitor gold. Let's see if it starts to trade in this area or if it can break out in a downward direction. Of course, it may still push forward, but doesn't matter which one of those three scenarios starts to form, it will give us opportunities to trade. All right, so if we notice that this market comes to this level, I will be looking for reversal there to try and take the trade back down there. If it pushes down towards here, I will be looking for reversal to try and trade it back there. When we get to those fringes, if we get to these fringes here and we produce the big breaking candle, well then I will be looking for this type of trade. And likewise on the other side, if it gets to a big candle as such, then we can look for that type of trade. All right, so it doesn't matter, we don't have to predict it. It's not about predicting it, it's just about noticing what type of market. Are we going to be in a ranging market? If we start to get into a ranging market, we're looking to trade off the ranges, and obviously when the range finishes, we want to trade the break out of the ranges. Okay, so there you have it. That's our analysis on gold for this week. To finish up, let me have a look at what's happening in the markets today. Any news that we may have. All that's scheduled for today is the economic forecast from Europe. And that is tentative, so there's no scheduled time for that, so look out for it this evening when Europe wakes up, and that pretty much wraps up all the data for today. Guys, as always, please feel free to contact us if you do have any questions. Follow me on Twitter at ChatFX for trade setups and breaking news. Most importantly, hope you all have a fantastic trading day. Have a great trading week, and I will speak to you next week for next week's weekly market analysis. Bye for now.